Hello, everybody. I'm James Leichter, president of Aptora, and I want to thank you for being here. What we're going to talk about today is basically job costing. We're going to be talking about some of the things you may not already know about setting up jobs and the finer points to making sure that you recognize all of your expenses, all of your revenue, and I'll show you a lot of tricks that maybe you're not aware of. So let's go ahead and get started. First thing I want to do is I want to open up my invoice item list because we'll be working in that. And I want to open up my invoice list. So I have my invoice items list and my invoice list open. And we'll come back to those. The one thing I want to talk about most here when it comes to job costing is item types. I find that a lot of people really benefit from this. Some of you probably know all this already. But let's cover it quickly, and if you have any questions, you can have me elaborate on it. Big point I want to make is the danger of using a non-inventory part. What's wrong with a non-inventory part? Why wouldn't we want to use it? Whenever you use a non-inventory part, you'll notice in the accounting tab, you have no asset selector. You have an income selector, and you have a cost of goods sold selector. It could also be an expense, but that's rare. But you don't have an asset selector. And the reason why is because it is a non-inventory part. It's never an inventory. The minute you buy it, it becomes a cost of goods sold typically. And that can be great because you might be special ordering something like a roof curb, for a rooftop unit. And you're selling it to them. I mean, if they cancel the job, you're still charging them for it. You can't return it. That's a great non-inventory part. Because having it become a cost of goods sold immediately to that job is just fine because no one else is going to get it. No one else is going to use it. But if you did that with a motor, for example, it becomes a cost of goods sold the minute you buy the motor. And that's fine if it's a special order part and you don't plan to buy another one. But too many people use it for routine items, and that creates a lot of problems with your financial reports. Now, I'm going to say job costing reports today, and I'm going to say financial reports today, and I'm probably not going to give it much thought as to which one I use, but it doesn't matter because whatever is not on your income statement, it can't be on your job costing report. So your job costing reports are only as good as your income statement, balance sheet, and those are only as good as your bookkeeping and your accounting. So again, the non-inventory part definitely has its purpose, but just be aware the danger of it is when you buy it, it becomes a cost of goods sold immediately. It becomes income when you put it on an invoice. Income when you put it on an invoice, with some minor exceptions, but that's kind of deep accounting stuff. But it's a cost of goods sold the minute you buy it. And what's that mean when you buy it? That means you create an item receipt and or a bill, you write a check for it, credit card charge, anytime you're using that items tab, it's becoming a cost of goods sold. Now, where it would really hurt you is if you're using non-inventory items for inventory purposes, like you do a pre-season purchase or you buy a bunch of copper or sheet metal or something like that, call it a non-inventory part, that can hurt you. Where it won't hurt you is if you bought a bunch of copper and a bunch of sheet metal for a job. You instantly used it. As long as you select that job on your bill, on your check, on your credit card charge, as long as you're picking that job, then you're fine. You're okay. Supplies, people tend to use non-inventory parts for supplies like pipe dope and tape, and they ask my opinion on that, and I'm like, sure, that's what I would do. I mean, a bucket of mastic, pipe dope, things like that, I would use a non-inventory part. My rule, though, is whenever possible, I try to associate that purchase with a job. So let's say you're buying a bunch of wire nuts and you plan to use quite a few of them on a job, but you're going to have a lot left over. That's a legit non-inventory item. You don't want to count wire nuts, but you might as well just cost it to a job if you can. Let the job pay for all those wire nuts and whatever's left over. Some other job's going to get them for free, but at least one job was costed to those wire nuts. Same with sheet metal and adhesives and other supplies. The inventory part is the way to go, and even better than an inventory part is the serialized item. All of your equipment should use the serialized item type because it's easy. Number one, if you're going to do inventory management, I want to see you start with serialized first. Master that, then move on to other things. Don't do everything at once. Master serialized. The nice thing about serialized is it's hard to forget because you have these serial numbers in stock, and it's easy to go find them, pick them, get them on the invoice. The costing is perfect because it knows exactly what you paid for that serial number, and that's nice as well. The inventory part and the serialized item, other than that, work the same way. Whenever you buy it, it's on your balance sheet. It's an asset called inventory. Whenever you put it on an invoice and hit that save button, you're relieving inventory and you're creating your cost of goods sold at that point, along with your income. That is going to give you the best job costing. Again, the non-inventory part has its place. We just see it abused a lot. And this serialized item definitely is going to give you the best job costing. So whenever possible, use serialized, use inventory for expensive things or important things. It's okay to use non-inventory parts when it really is a non-inventory part and you're buying it specifically to use somewhere. All right, so there's my speech on item types. We could talk more about that, but suffice it to say, that's important. One last tip. It's okay to go back to a bill and add a job name or a department for that matter to a non-inventory part. So let's say you have a non-inventory part. You've had it for a couple of months. You finally use it. You wish it was inventory. Well, you could go back to that bill and you could select that job. Keep in mind, if that bill is 3 months old, then there's nothing you can do about the date of that bill. But it's okay to go back and add a job name to financial records to try to pick up some of those costs in job costing. It won't affect your income statement. It is what it is, but it would affect some of those job costing reports. All right, let's open up an estimate. I'm going to go to the estimate list here, right click. I don't have to do it here, but I'm going to right click and create an estimate. What I recommend you do, and keep in mind when I give advice, a lot of times it's an oversimplification because I don't want to go down too many rabbit holes. I try to give information that applies to most companies, but people have their own circumstances. But in general, when I create an estimate, what I'm going to do is I'm going to pick, let's say it's commercial work, and it could be residential, but the point is I want to pick a parent. If we don't have a child, we haven't put the job in, I don't want to do that yet. I want to pick the parent when I create my estimate. Only if it's awarded will I create the job, the child underneath it. So again, in Total Office Manager, you can have parent, child, grandchild relationships. Typically, the way we do that is we have the homeowner who might have 2 properties. Maybe they have rental property where we send the bill as the parent. The corporation might have a parent company. That's where we send the bill. That becomes the parent. If I sell them a job, not a service call, but a job, I like to put that in as a child and give it a job name. But I don't want to put in jobs when I'm not selling the job. So I pick the parent first. And if we get the estimate awarded, then from here I add a child to that parent. In this case, the child is the job, the name of the job. If you don't use it, the estimate status is very helpful. These estimate statuses right here. Those can't be edited. They're hard-coded, as we call it, for a reason. If you need something that's editable, then use the stage feature right there. Use stages. Otherwise, use the estimate status, at least at a minimum, to signify that it is awarded. On my monthly, quarterly, 6-month, and 12-month checklists, which you can go to our website and you'll see those checklists. On those checklists, one of the things that I want you to do is look for estimates that should have been marked awarded. Then look for awarded estimates that should have been invoiced. Look for estimates that are part of a progress invoice and make sure that you've invoiced the entire amount. So you're looking for estimates that need to be marked as awarded. If they're awarded, you ask yourself, have they been invoiced? If they've been invoiced, you ask yourself, have they been invoiced for the entire amount? Am I waiting on 10%, 20%, 30%, or whatever it is, and I forgot about it? So be sure to look for those. But the first step is identify estimates that need to be marked as awarded and go from there. There's a concept that I like to use, especially for commercial work on these estimates, that I'd like to show you. And there's a help topic on this. You'd be surprised how many help topics are on that website. If everybody read every one of them, I probably wouldn't have a speaker's job, because you'd just be like, man, that guy just repeats the help topics. I don't need to watch him anymore. The concept I wanted to show you is the bid line item concept that I call it. Let's go pick an item, and I'm going to use the lookup and show it to you. It opened up on my other screen, so I want you to see what I'm doing here. Now I'm going to search for the word bid, and it's not case sensitive in this case, so I'll just put in the word bid, and I didn't find it. Why didn't I find it? Common thing in our software is searching for things. Biggest complaint we get on mobile is searching. Can't find anything. And I often hear people say the same thing in Total Office Manager, but there's always a trick. There's always something that you might be missing. In my case, what I want to do is I'm going to search for the number. And I can barely see this small screen here. I'm looking for the number. And where are you? There it is. Okay. So I want to search for number. And once I switched over to number, you'll notice several things popped up. And these are what I wanted to talk to you about. I'm just going to highlight every one of them and move them over, and then hit OK to get them on my estimate. The idea behind these is to allow you to just, and again, remember I said this is just one approach. It'll be great for some circumstances, others you won't use it. But the idea behind this is to allow me to just type in an amount for equipment, the retail price of the equipment, type in amount for the labor, the subcontractors, parts and materials, supplies, other direct expenses. So each one of those has already been prepared, and the only thing I have to do is just type in an amount for those. So let's say that equipment is going to be $25,000. So I'll just type in 25,000, and we'll say that labor is going to be $7,000, and other, I'll put in 2,000, and parts and materials, I'm just making up these numbers, subcontractor, I'll put in a couple thousand for a sub, and supplies, I'll put in 500. So here I have a proposal of $41,500. There isn't any, obviously, individual items on here, and maybe I don't need to, because I know I want to sell it for $41,500. This approach is perfect when you know the price you want to sell it for. Maybe you've used takeoff software and you've come up with a price of $41,500 in your takeoff software, and you want to reproduce the invoice in Total Office Manager, the estimate rather, in Total Office Manager. This would be a way to do it. If you get the job, then you can worry about itemizing it. That can come later, but now you've got something you can use. When you print it, as you probably well know, when you print it or email it, you can show details, not show details, etc. So no one has to see any of this. But this way, you've got a decent estimate with at least it's broken out in 6 different areas. And again, if it's awarded, we'll worry about the details. So how would we do that? Well, let's say it's awarded. First thing I'm going to do is change it to awarded, which I did a moment ago. And then I'm going to use the lookup again, and maybe a barcode scanner would be helpful, so I don't have to do it manually. But I'm going to come in here and filter out by inventory parts. And I'm just going to randomly pick things, which you wouldn't do, but I don't want to get too carried away on trying to make this look realistic and waste your time. But this is you putting in the real equipment, the real parts and materials, the real labor items, and things like that. Move it over, click OK. All right, so while that populates, I'll just keep talking about what I'm doing here. The problem, of course, is when it's finished populating, it's no longer going to be $41,500. What I could do is remove those items at the top. I could get rid of them and build the estimate so it matches the $41,500, or I could leave them there, keep the retail price what it is, and everything I add to it will have a zero retail price. And that may seem weird, but let me explain. It's actually very effective. The items at the top have a retail price, and that will become income. So whatever income accounts you've picked, and you would imagine each one points to a specific income account, like the labor item, parts, material, equipment, all point to the correct income account. That's where your income's coming from. When you put all these items on here, that's creating your estimated cost. And that's why the word estimate goes back a long time. That's why we use that term, when maybe you're used to using the term proposal, but back before that, the estimator got involved and the estimator created an estimate. And they did that by gathering all these items that they thought they would need and putting them all in a folder somewhere and added them up with an adding machine. That's what we're doing here. We're taking all those items, all the labor, adding it to the estimate to try to figure out what the job's going to cost us. In this case, we already knew what we were going to sell it for, but you may not know that yet. The thing is, if you use this technique, you just need to make sure that you remove the retail price of all those items. And you can do that very quickly in this form because we have a utility for that. But what you may not know is that you can create a markup method called no retail price. And why in the world would you want a no retail price markup method? Well, we actually have a markup method type called no retail price on purpose. We want to make sure that no retail price was not an accident. No matter what, it makes sure that your retail price is zero. But you're picking up the cost of goods sold when you buy those items, sell them according to accounting terms. You're picking up the cost of goods sold as you normally would. You're just setting the retail price at zero because that was already established with the items on top. But again, you could use those items on top as a placeholder and remove them if you wanted to. But let's say that's what we're doing. We're going to add all those items on there. And let me put in a labor item and get this number up a little bit higher. Okay. All right, I'm going to hit save and see if it likes that. Depending on your preferences, it might complain about a missing department or something. And we should pick, at this point, a department for sure. We should pick a customer job and all of that. So don't shortcut that. Be sure to pick all that. Fill it out properly. But what I want to do is just go right into creating an invoice. So I'll create an invoice. This pops up. You've probably seen it. You want to create an invoice for the whole amount. Do you want to create an invoice for part of it? I'm going to do a whole amount in this case. So it's going to reproduce the estimate. It's going to warn me that I don't have sufficient quantity on hand. Before I just click Mind Your Own Business button, let me explain what that means. And I know you don't have any, so what? But let me tell you what the ramifications are. If I go into preferences and tell the software to let me sell things I don't have, then I'm creating a lot of accounting problems unless I fix them. And you can fix them and have no problem. But if you forget to fix them, you can create a lot of problems for you. So I'm going to click yes, and I'm going to explain that further. When you sell an item that you do not have, and this only applies to serialized items and inventory parts, not non-inventory parts, because you never have any of those, right? When you sell an item you don't have, you go into a negative number for your quantity on hand. And you're basically creating a negative cost for yourself, among other things. It creates a lot of problems, and the more you do it, the harder it is to get out from under that. People have often asked me, well, why do you do it like that? Why can't you just fix the software? We do it the same way that NetSuite does it. We do it the same way QuickBooks does it. It's just accounting. You just don't have a choice. When you sell something you don't have, the software kind of freaks out because you don't have it. How could you sell it? In the old days, before accounting software came along, you couldn't sell what you didn't have, right? I mean, if you didn't have it in stock, you couldn't sell it. You couldn't sell what you didn't have. So the software thinks the same way. You can't sell what you don't have, but since it's software, we can force it to accept that as the reality. But again, that's going to create a lot of job costing problems. When I say job costing, I also mean your income statement and your balance sheet. All right, so here we are in the invoice. What I wanted to show you was the projected total right here. A lot of people don't use that. The projected total was going to be $41,500. That's what I told the lady that we can sell it for, and she said, yes, I'll take it. And it's $41,500. When I go to create the estimate, and the estimate has this feature too, when I go to create the estimate or the invoice, I can type in that amount. If I come from the estimate, I can have that amount in there, and that allows me to keep track of where I need to be. So let me just show you. The projected total is $41,500. The difference between what I quoted verbally and what my paperwork says is $9,466. So that's a big difference. I have to fix it. I'm over by $9,406. So how do I do that? Well, you can just start adjusting these items if you'd like to. Just move these numbers, make them lower. But you can also use a special item that you can create called an over-under item. So you notice I have an item called over-under, and I can put in the correct amount to get this to match 41.5. Now, I don't feel like I did a very good job of explaining why exactly are we doing this. Couple different scenarios. You could give somebody a quote on the phone or just at a party. Who knows? We do it all the time, right? We just know how much it's going to be. That's going to be $20,500. Well, I'll take it. And then you find yourself having to build paperwork to match what you said. Or you could have used another software program like a takeoff program doing design build or project work. And maybe it totaled up to be $41,500. And now you need to create an estimate and or an invoice to match that amount. The projected total is where you would start. You type in that amount, and then it tells you how close you are to that number. Another scenario, you create your estimate, you sell the job, and then you create an invoice for $41,500. The last step to good job costing is to make that invoice reflect reality. You look at that giant parts list on your invoice, take away anything that you didn't actually use. Maybe you thought you needed a line set and you kept the one they had. Take the line set off the invoice. Maybe you thought you needed 2 disconnects, you used 1. Take 1 disconnect off. Maybe you thought you were going to sell 100 hours of labor, but you sold 90 or 120. Make that adjustment. The invoice, not the estimate. We leave the estimate alone because the estimate was your estimate. And I want to go back and look at what your estimate was. What we do is make the estimate never change once the job is sold. We make the invoice change to reflect reality. The problem with that, though, is it won't be a $41,500 invoice anymore. To make up for that, you're going to put the over-under item at the bottom and type in the difference. There's an easier way to do that. Put your cursor in there and go up to that difference and right click on it, and you'll see this little pop-up, add to item retail. Click it. It will add that item and make those two balance, even if there's sales tax involved. And that's pretty complicated. If there's sales tax in there, you'll kind of see it calculating 2 or 3 or 4 times until it gets rid of the rounding. But it'll put an item in there that'll reconcile the total amount with the projected total. That way you don't have to mess with any of the items. The over-under, depending on how you set it up, if you set it up the way I'd recommend, you have an income account called over-under. That income account shows up on your income statement as a positive number. Positive being, hey, it's a good thing you underestimated your costs, and it could be a negative number, and that means you underestimated your costs. But either way, at the end of the year, you're hoping that that is a positive number, or at least not a negative number, because that represents your over or your under prediction of job costs. So that's how I recommend it. You create that estimate. I like to use those items I showed you and then detail it later after the job is sold. Then I'll detail it. I'll detail it if I have to, because maybe I don't know what to charge, so I'll detail it in advance. I like to use the over-under because we have to get the invoice to reflect reality. We never change the estimate. Once you do that, then you can start using one of my favorite reports in the software, and that is the job estimate versus actual summary. That's a good place to start. And then if you want to pick on a certain job, you can use the detailed. I'll just go into the detailed. And let me just run it the way it is and see what pops up. What this report does, just what the name suggests, it shows you all the estimated versus all the reality. So it's going to look like this. It'll start with the inventory parts. It'll show you the part, the quantity, the cost, what you sold it for, etc., versus reality. How does it work? It just looks at your estimates and it looks at your invoices. You can do it by job, date range, etc., salesperson, whatever. You can build your own too, by the way, in the custom data view area. You can make another version of this if you'd like. After it goes through the inventory parts, it'll go through your non-inventory parts, your serialized, your labor, etc., and you'll be able to see reality versus estimate. Typically, you always get equipment correct. I mean, if you're not getting that correct, that's weird, right? Like, I thought we were going to install 12 rooftop units. We ended up doing 20. Wow. I miscounted. That's probably not going to happen. So you'll find your equipment is good. Your parts and material should be pretty close. Your supplies, it's kind of immaterial. You'll be high and you'll be low on occasion. But where you'll really find the problem is labor. And the more labor items you put on your estimate, the more work it is. But the more detail you have. Like if you have a labor item for doing design build work, you know, like you're in there with the blueprints doing the work. If you have a labor item for that, that's good. If you have a labor item in there for ordering and acquiring and delivering or picking up the materials, the equipment, etc., that's good. Maybe you have one for tear out. Maybe you have one for disposal. Maybe you have another one for sheet metal work. You have rough in, you have trim, startup. Again, it's more work, but what that allows you to do is compare timesheet entries with what you estimated. And you'll find where you're more inclined to make a mistake or to underestimate. You'll find it a lot easier by doing that. So the job estimate versus actual is really a terrific report. There's another version of this in the custom data view area that would show you how much of the job, it'd show you these details, but it also shows you how much of the job you are yet to pay for to finish, how much money you still have coming in for the job, which helps predict cash flow. That's a terrific report as well, but you get the idea. Job estimate versus actual, detailed or summary. Use the summary to scan lots of jobs, and then you can get into the details when and if you need to. Couple dangers on this invoice I want to talk about. One, I'll reiterate. If you have non-inventory parts on this invoice, you will create no cost of goods sold. None. They're all free. They went to the job for free. So anything you pull out of your warehouse that's non-inventory or it's not otherwise in the software, it went to that job for free and there's nothing you could do about it. That's how non-inventory works. You have few options. If it's an inventory part, you're good. If it's a serialized item, you're good, except when a couple things happen. On an inventory part, you sell one you don't have. You go into negative territory. At a bare minimum, it has no cost, but it could even have a reverse cost because you're pulling something out of thin air and it could actually create an asset depending on how it's set up. That would be bad. The other thing that could happen is you could sell a serialized item, and depending on your preferences, you don't have to pick a serial number. Now, that is usually a terrible idea. It is not a good idea to sell a serialized item and not pick a serial number. Why would you ever do that, you might ask? Or why would a software company ever include that capability? It does have its use, but it's turned off by default. It's a company preference that only somebody with higher permission should be able to get to. The reason why we have it is you might sell a serialized item, take a down payment on it, collect on it, whatever, but you need an invoice. That's the key here, is you need an invoice because you're taking in money, but you don't know the serial number yet because you have to order it, you have to get it. And maybe it'll come in 2 days, but maybe it'll take 3, 4, 5, 6 months. Maybe it has to be manufactured overseas and brought in. That could be a legitimate reason to not pick the serial number. But for the rest of us, you just don't want to do that because you're selling it for free. When you don't pick a serial number, it has no cost and you're going to over-report your income. Things are going to look better than they really are. That's the danger of it. Now, again, with powerful features like that come responsibility, accounting responsibility. Accounting people should be watching for that. They should understand the implications of giving permission like that. That setting really should be done by an accounting person because they would be responsible for making sure that we don't hurt ourselves. What could we do about that? Well, you could go to the invoice list and you could search for any item that doesn't have a serial number. And there is a selection for that. Get my glasses on so I can see these choices. Oh, there we go. Out of stock serialized items. So if I pick that and click go, then it's going to show me, well, I gotta say yes. It's going to show me any invoice that has, and I've got 64 of them, it's going to show me an invoice that has a serialized item on it where I did not pick the serial number. So those have to be fixed. I need to open those and fix them. Otherwise, I've got serious accounting problems. It's easy to fix them. You do have to open each one of them and pick a serial number, but it's easy to fix those. How would you ever catch such a thing? Well, first of all, you shouldn't turn that feature on unless you need it. And the feature that says it's okay to sell out of stock, you shouldn't turn that on either unless you need it. If you do turn those on, just understand the ramifications. Someone has to look. So there has to be in your SOP, your standard operating procedure, in the accounting or finance department, in their SOP, there needs to be on a checklist somewhere, look for these things. Look for out of stock, look for missing serial numbers on invoices, just like there should be look for estimates that should have been awarded and invoiced. Look for work orders that haven't been invoiced. Look for reimbursable items that haven't been invoiced. What's that? Many of you already know, but when you create a financial record on the AP side, on the purchasing side of the software, you have the ability to check a little box here that says reimbursable. And if invoiceable were a word, I would have selected that instead years ago when we put this on here. When you buy something and you buy it for a job, it checks that box automatically unless you go into preferences and tell it not to. But by default, it checks that box automatically. It's just a reminder system. When that box gets checked, the software is being told, hey, don't let me forget to invoice somebody for this item. And when you go to create the invoice, they'll be in a list and you can grab them really quick and drop them on the invoice, or just double check. Maybe you've created the invoice from an estimate and you double check the reimbursables to make sure they're all on there. Either way, that reminder is in there, and it's just a reminder. It has no effect on accounting, except if you ignore the reminder and don't do your accounting properly. But it doesn't directly affect your accounting to use that feature. You can dismiss it. When you open up that form, you can tell the software, thanks for reminding me, but I don't need the reminder anymore, and they go away. As long as you get those items on the invoice, that's what's important. Whether it was the reimbursables feature that did it or something else, doesn't matter. If you don't know where that is, just go to your menu, go to reimbursables, open that form, and you will see everything you've ever bought for the job. You will also see expenses, not just cost of goods sold, but you will see expenses. You'll even see timesheet entries. If you've been entering timesheets for this job and you want to get them on the invoice, and you should, even if the retail price is $0, you should get them on the invoice, because remember, the invoice should be compared against the estimate, and that's how we would do it. One of the ways of getting more information on there. But anyway, all of that's in there, and you can drop those on to the invoice, or say hide. Check the hide box or hide all and get rid of them because you've already taken care of it. I mentioned timesheets. I want to stress how important timesheets are. When it comes to job costing, the only thing that means is you're costing out the job. There's nothing extra to do. There's no extra work. When you're doing your bookkeeping and your accounting, you're just making sure that if you buy it for a job or if you pay for it for a job, put the job name on there. That way you can run reports by job name and get your job costing, but there isn't any extra work. It's really important that you understand most of the time you're going to get your equipment exactly right or close enough. You're going to get your parts and materials pretty close. Where you're going to have issues in job costing is most likely labor. You want to make sure that your company is using timesheets for all your billable people. Your office people too, if they're hourly, but that's another thing. When it comes to billable people, I don't care if they're salaried. If they're billable, they need timesheet entries, because we need to know how many hours we pay people, what job it went to, what service call it went to, etc. Just like we need to know how much we spent on those people, we need to know every hour that went into those jobs. And timesheets are the only way to do it. They have to put in timesheets. I realize that timesheet entries could be put in incorrectly. I should say will be put in correctly. I realize that. It's the human factor. But if you can get the timesheets, say 80% correct, that's a B- if you're going to school. That's still really good. 80% correct is still really good when it comes to the timesheets. Some companies could be higher than that. Most companies are lower than that unless they realize how important it is and really step up their effort. So timesheets is the first thing that I would do if I was getting started in job costing, or I wanted to improve my financial reporting, including job costing. The first thing I'd do is say, get used to timesheet entries. Do that extremely well. Pick the correct department every time, etc. Once you've done that, then start tracking serialized equipment. If it's a piece of equipment with a serial number, use the serialized item type, and be sure to always pick that serial number when you're selling it. Always enter that serial number when you're buying it. What about inventory control? We're using non-inventory parts. Well, if you're getting the labor correct and you're getting the equipment correct, you're in pretty good shape. Now we'll introduce the concept of inventory parts, and we'll start with the expensive stuff. We'll start with things that cost quite a bit of money. Many thermostats, motors, especially ECMs, lots of parts out there that we could start with that are expensive. We'll go with that first, get used to it, and start adding things that are less consequential, like a transformer, an RBM relay, a contactor, a capacitor even. Just start with the motors and start with the thermostats, things like that, circuit boards, main boards. If it's $100 or more, it's a no-brainer. Start tracking that as an inventory part. And again, when you master that, then you can introduce other things to start tracking. The other gotcha on these invoices is not adding everything that you used on the job, or not taking away things that you didn't use. I mentioned that earlier. What I didn't really talk about though is, how do we know? How can you know that stuff? Well, there's many ways to know it, but let me give you some options here. Going back to the estimate. When you create the estimate and sell the job, the workflow could go like this. The first thing you could do is go to print your pick ticket. That's an old school term. We didn't make it up. Been around a long time. A pick ticket. What that is it's a piece of paper telling you what to pick from inventory. And I won't go into the options. I'll just hit preview. Normally we'd hit the options and get rid of some of these things. All right, so these are all the items that I need for the job. And it tells me how many I have in stock, how many are on back order. There's a place to write down how many I pulled. You can see where they're located, etc. So I would start with a pick ticket and I would pull anything that we need from inventory. I'd write down what I pulled, and then I'll start staging the job. Let's say, for example, we have a warehouse with garage doors. We might tape off several areas, and we'll call one of them staging 1, staging 2, staging 3. We tell the installation crew, come get your stuff in the morning. You're at staging area 3. We would put their stuff in staging area 3. We first add to that staging area everything we have. Then we contact one or more suppliers and we acquire what we need. We pick it up, have it delivered, whatever, and we put it in that staging area. Once they have everything, we give them the pick ticket, or we print a copy. And the pick ticket is like the packing slip you're getting from your supplier. In fact, many of your suppliers call that a pick ticket when they print it, and they call it a packing slip when they hand it to you. Sometimes the software changes those words, but it's the same thing. You're using it to pick what you have, and you're giving it to the customer to show them what you've given them. In this case, it's the installation crew, and they take all that with them. The installation crew should have some supplies on their vehicle, but it should be according to a list. We have a truck stock list for our installers, and they are allowed to have whatever you say they can have. The only rule in my book is it has to be on the list. So as long as it's on the list, I don't care what you allow them to have. They can have whatever they want. I'm going to give them the things that are not in their truck stock. And I expect them to give everything back to me that they don't use. They don't get to keep it. They don't get to keep it. They give it back to me. Well, when I know that I gave you 100 widgets and you gave me 7 back, I know that you used 93 on that job. So I could go back to not the estimate, we don't touch it. I could go back to the invoice and I could start changing quantities, in this case from 100 to 93. And instead of 6, I could change something to 12. Using this piece of paper, knowing what I gave you and what you gave me back, knowing what we ordered, even stuff you went and picked up. You created purchase orders in the field, you went and picked up stuff. The key is I know everything we gave you and everything that any of us bought to give you. I know what you bought and picked up. I know what you gave back. So I'm able to tell what you used on the job, and I will adjust the invoice accordingly. So the job pick ticket gets turned into billing, the billing department, and they use that information to create the invoice. And again, I know I'm repeating this, but it was an important point. The invoice amount could have been $41,500, When we adjust the invoice, we're not adjusting the retail price, we're adjusting the cost of goods sold on that invoice. And we're using the over/under button to demonstrate how well we estimated the job. That's the estimate versus actual explanation. And don't forget, if you didn't catch it, we had that little right click trick. You know, I right clicked, hit that button, and it automatically populated the over/under, which is super handy, especially if you had sales tax, discounts, things like that on there that you have to account for. All right, so after the pick ticket is created, then we would hand that to purchasing. And they would buy whatever we need for the job. And how would they do that? Well, one way they could do it is they could open up the estimate. And by the way, you could use stages for this. You just go from one stage to the next. I don't have good stages in this one, but in my template that I use in my coaching and consulting, I've got all the stages built out for every part of this, and you can too. I'll go to menu, and I'll go to create purchase order. You have two options, and I wanted to explain these. Single purchase order is pretty easy to explain. It's going to create one purchase order. Why would you want per preferred vendor? Well, when you create an item, you have an option of picking your favorite place to get it from, where you get it from mostly. And maybe that's XYZ distribution. I don't want to use a real name because then I owe some other distributor a call out. So we go to ABC distribution most of the time to get a particular item. Pick that when you create the item. It will create purchase orders for those particular items for those particular vendors. That way you can create multiple POs. But another thing you could do is create a single purchase order, and at that point you could pick from inventory what you already have, take that off that purchase order, then create copies of the purchase order. In the purchase order, click menu, create copy. Create your own copies of the purchase order, removing from each one what you don't order from that particular supplier. That's another way to do that. But the flow, either way, the flow is pick ticket, grab from stock, create purchase orders, order what we need. Have it delivered to the job site, go pick it up, deliver it, bring it back, have it delivered to us. Whatever you do, that's fine. We have shipping methods in the PO for that reason, but the PO is the next place to go. After that, you might create your work orders. So you can come from the estimate to do all these things. Create your work orders from the estimate. You have the option of carrying items from the estimate to the work order. Why would you ever do such a thing? It may be that you want to indicate what they should be taking with them. You might want to indicate what we staged for them. So I might say to you, I just assigned you work order 1, 2, 3, 4. You're on staging area 3, and everything is on your work order that you need to pick up. And that's how that would work. And then again, keep track of what they bring back. That's the key. When they bring it back, you now know what they used. But really important that you establish a truck stock list and you tell people it isn't that important what we stock on the trucks. You just can't put anything you want on your truck, and you can't keep stuff that you decided you'd like to have. You have to give everything back. That's very important. Did you know on a purchase order, let's go to one, purchase order. On a purchase order, oftentimes you will have a lot of items and sometimes they're duplicated. Why would they be duplicated? Well, let's say you came from an estimate, and in that estimate, you might have had phase 1, phase 2, phase 3 of the job. You might have had upstairs HVAC, downstairs HVAC, or whatever. Could have had options, and that created duplicates. When you create a purchase order from an estimate, you're creating duplicate line items. So you could have the same thing at the top as you do down at the bottom, and that could drive your vendor nuts if you send them that PO and they go grab an item, and then later on they got to go grab that same item again because it was at the bottom of the list. Well, there's a way to deal with that if you'd like to, if that happens to you. You can go to Menu and click Consolidate Items. And it'll warn you what's about to happen. Click OK. Pause a minute, and what are you left with? No duplicates. What it does is it just consolidates the same item into one line item, of course adjusting the quantity, but you end up with fewer things, and now it's easier to manage. I wanted you to be aware of that. There's people that have had our software for lots of years, and I show them that, and they're like, oh man, I wish I would have known about that. We've had vendors complain about such a thing, and that's how it happened here hearing vendors complain that they pulled a thermostat and then, half hour later had to go back to that same area and pull another thermostat because it was on there twice. So that's what that feature is for. From the purchase order, you could shortcut into your item receipt, but chances are you won't. You'll do your item receipt later. Many of you have heard my explanation on this packing slip item receipt workflow, but I want to explain it really quick. When you get a packing slip from your supplier, you want to hand that to somebody whose job, we all know it is, to enter packing slips. And you won't find packing slip on the menu. You'll see receive items or Control R. Might as well say enter a packing slip. When you enter into this form and you pick a vendor, it will tell you that you have open purchase orders, if in fact you do have open purchase orders for them. And I'm going to find somebody in here that is likely to have some purchase orders. Not them. I think I used a bunch of them. So you pick a supplier. If they have a purchase order, it'll pop up and tell you that there are purchase orders. There we go. There are purchase orders. Would you like to recall the last transaction? No, in this case I don't. What that would do is it would make a copy of the last item receipt I had for this particular supplier. I don't want that. Click no. So then it would tell me I have open purchase orders, and it would copy that information over to the item receipt. Well, when you pick something up or they deliver it, someone's job is to make sure the packing slip matches the pile of stuff that you picked up or had delivered. You don't have to know anything about the job, the order, the PO. Your job is to make sure that the piece of paper they handed you reflects accurately and completely the pile of stuff that you have in front of you. Once you do that, you sign off on it and you turn it in to the person that enters the item receipt. Their job is to simply make sure that the packing slip matches the item receipt, which means it will match the purchase order. So we know we picked up what's on the packing slip. Now we're about to find out if the packing slip matches the purchase order, because that information got copied over to the item receipt. If it does, then we know exactly what we ordered was delivered. We know all of it matches the purchase order, and all of it matches the item receipt, which in most cases affects our financial reports. So at that point, the only thing maybe we don't know is the price. The price could have, maybe it wasn't on the packing slip. It usually is not. We do know that we got what we ordered. We got what we paid for. We just don't know if we paid the correct price. We enter that item receipt. Non-inventory parts, we've just created a cost of goods sold. For inventory parts, they're now in stock, ready to be sold. The next step is to enter the bill. The bill arrives for that packing slip. So I go back to vendors and I go to enter a bill. If I click up here, enter a bill, it'll remind me that we have purchase orders and we have item receipts, and I'm probably in the wrong place. It'll tell me to go over here. It'll tell me to go to enter a bill for received items, for things you've already entered through that receive items form. This pops up and you pick which. So you're looking at a bill. You pick which item receipt that bill represents. Click OK. Are you sure? Yep. It'll open up a form with a list. If you need to review them, and you should, open them one at a time. Now your job is to make sure that this represents the bill that's in front of you. You make sure that your bill that came via email or in the mail matches this form. If it does, then you know this form matches the item receipt, and the item receipt matches the purchase order, and those things match the packing slip. All of those things match means that you got exactly what you paid for at the price you anticipated. Anything that needs to be fixed, you fix it, you deal with it, and you put in notes. This is where you would pick your serial number right there, simple as can be, or pardon me, I said pick serial number, I meant enter serial number. You enter that serial number if it's not in there already, but in this case it's already in there because it happened during the item receipt. But that's really good job costing. When you do it like this, then most everything is flowing into that job properly. Master those timesheets and you have it made. Now, if this is reimbursable, and it should be, let's open this up a little bit. If it's marked as reimbursable, then we'll also have a reminder that's on the invoice right there. We'll have a reminder on the invoice telling us, don't forget to invoice for this. And that way we pick up our cost of goods sold for inventory and serialized, and we pick up our income. So that's the flow. If you follow that, you got it made. Everything I was talking about was just basic bookkeeping and accounting. And when I say basic, I don't mean to suggest that it's not time consuming. I just mean to say that it's not really that difficult. If you work off SOP and you have little cheat sheets that give you an idea of the flow, which that's what this is, not the info center. Click the wrong thing. That's what this is. This is your basic cheat sheet. Go to your vendor, and it gives you a little cheat sheet on the flow that we just talked about. If you follow that basic flow, that's not difficult to understand. I understand that part. That's different though than it being, hard work. It can take time to do it, but it's not hard to understand is what I'm getting at. And for that effort, you're going to have a more accurate income statement, balance sheet, and along with that, job costing reports. Speaking of job costing reports, if you're not aware of it, where do you go? One place you can go to is here, right there. Those are your job costing related reports. You also have a lot of options in your custom data views. There's lots of job related data views that you can run. And if we don't have a report built into it already, you can build your own. But there's some in here that are my go-to. I like two myself when forgetting custom data views for a minute. If I had to use reports that are built in, there's several that are really helpful, but my go-to is the job costing overview and my job estimate versus actual detailed right there. Those are my go-tos. Don't forget also, most of these reports, like the job costing overview report, you can double click on it. It'll show you, for example, how many hours you estimated versus how many you actually had, and lots of other things. You can double click on that. Final thing I wanted to show you is going into your customer job list here. You can add or subtract a lot of columns so that you can keep track of balance due and things like that. But don't forget that if I right click and go to history on a job, you can see every timesheet for that job. You can see every invoice, every work order, all the payments they've made, the estimates. And when it comes to the estimates, you can see how much of the estimate was billed. It'll show you a percent of how much was billed. Again, all those timesheet entries, AIA payment applications, you name it. Most everything that you could want to know about that job, especially at a high level, is right there in the history form, and you don't necessarily need to run a report until you need to run the report. But this is a great place to just go in quickly and see how well you're doing on that job, and then go from there if necessary. But a lot of people forget that's a great place to go to look at your job. It's almost like a dashboard in itself. All right, Will, do we have any questions?
Yeah, we have just one. If you sell something that is out of stock but receive it to stock the next day, does it fix itself, or does that still mess up the accounting part of it?
Good question. I'm going to repeat that question, and that is, we sell an item today that we don't have, and tomorrow we get it. We put it in stock. Does that fix itself? Almost, not quite, because the problem is, according to the accounting software, and if you could picture this, we're writing everything to a general journal, just like the old days. We have written in there something that happened today. We sold something that didn't cost us anything. And then tomorrow we're writing into that general journal, we bought something that we haven't sold, even if we have. But the dates are different, so it doesn't fix itself. So you have to do an adjustment on the value of the item in order to fix that. Or there's a tool, there's a utility that you can use to help reset those things in bulk. But you'll have to, in most cases, your everyday thing that you do is you will have to do an item adjustment and adjust the value that way.
She said, but it still shows our cost on the invoice.
That's showing, the comment was it's still showing their cost on the invoice. At that point, and this is in preferences, you're seeing the fallback. Let me show it to you. You're seeing a fallback called the estimated cost. In your items, you have an estimated cost field, and when it doesn't know anything, when it doesn't know any better, it has no accounting to rely on, it can use the estimated cost to present to the user what this item would cost us if we had actually bought it and sold it. So that's probably what you're looking at, is the estimated cost. If you go into preferences, go to sale, invoice, estimate, company, you'll see a ton of preferences in here. You might pay attention to this one. How should the cost each field be populated for inventory items on estimates? Some of these options are creating what you're seeing. But I believe it's the estimated cost field that you are seeing on that invoice. One way to tell for sure is to, by the way, if you have all these forms open, how do you find anything, right? Well, you can go to Window here and see everything. So what I was looking for was my item list right there. All right, so on these items, actually, you know what I want to do? I want to open up my invoice list. All right, so I'm going to right click on an invoice here, and well, let me open it here. I was trying to be tricky and save some time. Let me just open this up so I can show it to you the right way. Here's how to tell what's happening with that estimated cost versus real cost. What is going on? How would I know? If you're in the invoice, right click and go down to find in the general journal. That's that big book I was talking about that accounting people wrote into. Find in the general journal. It's going to open up that big accounting book and take you to that page where these were entered, where these were written. And here you'll have the answer to what that number really is, because you will see all the costs of goods sold accounts in here and their values. And if you don't see that number you're looking at, then it isn't an accounting number. It's just an FYI number. So come in here and look for that. If the number was 1329 and you find 1329, take a look, because that might be it. But if you're not seeing that cost, then you know it's estimated cost and it has no effect on your accounting.
And we had 2 more questions.
Okay.
Relating to timesheet entries, is there a way that the technician can select the phase they are working on from their side versus the alternative method of the technician turning in a summary sheet and then an administrator having to manually enter to invoice?
So the question was, can a technician, when they're entering timesheets, can they select a phase of the job when they enter their timesheet? The only way to do that, if you really need to have that information, that you have to have that information in some meaningful way, some way that you could report on it, is to have work orders for each phase. And then when you create a timesheet from a work order for phase 1, phase 2, phase 3, then we can distinguish where they were when they entered that timesheet. We would know by looking at that particular work order. Other than that, there's really no good way of being able to record that. Another thing that may not help most of you, but keep in mind, I don't have one, and this database, I don't have it set up. In another database, I've set up an example of phases for estimates. So I've created estimates with phases, and then I've entered multiple jobs representing different phases of the job. So underneath that parent, I have a job, and then I have phases of that job. Like I could break out the different trades. I could do plumbing, electrical, HVAC, whatever. You could create phases by creating subs under the job, and then they would clock in and out of those. Hopefully that answered that question. Separate work orders.
And then the last one was, in the case of an ongoing job, let's say a 10-month project, is there a way to pull a pick ticket that would be updated to reflect which items have been previously recorded versus the new items the installers would be taking on a future period?
So the question was, we have a long job, ongoing, maybe 10 months. Is there and lots of items have been coming in and out, right? Is there a pick ticket that you could print that would show what's gone out? Do I have that all? Will, what part of that did I forget?
Yeah, do you want me to reread
Pick
it
ticket?
one more time?
Yeah, reread it, please. I want to make sure I give a good answer.
In the case of an ongoing job, let's say a 10-month project, is there a way to pull a pick ticket that would be updated to reflect which items have been previously recorded versus the new items the installers would be taking on a future period?
Okay, so can they print a pick ticket or something to show what items have been previously recorded versus what they're taking now? It depends. There are reports that can allow you to do this, but it depends on how you're managing inventory and what item types you're dealing with. So this would really only work when it comes to the software. This would really only work with inventory parts and serialized, because again, a non-inventory part is never in stock. So we really don't have a good way of knowing when something was taken or put back or whatever. But there are reports that would show you what items have been taken to that job, which ones have come back. Custom data view would be the way to go, but here's the mechanism that you would probably use to make that happen. If you go to customers and go to, sorry, I meant to say company. Go to company in the main menu, go to inventory adjustment, and you might see a feature called inventory transfer. If you don't see it, then you need to go to preferences, items, company, turn it on. Inventory transfer, assuming you have permission to get to it. What the inventory transfer feature allows you to do is pick a job, pick a date, you can backdate this, and then you will grab items either from a list or use the lookup. So let me go through this. I'm going to say today's date, I'm going to backdate it. Type of action, not a warehouse transfer, I want to transfer ownership. All right, ownership to who? The job. So here you can see I have 24-hour fitness, I've got the store, I've got the job name. Under that job name, by the way, I could have the phases, phase 1, phase 2, phase 3, or have different trades, HVAC, plumbing, electrical, etc. I'm going to pick the job. All right, so what am I about to do? When I grab an item and hit save, I'm transferring ownership of that item to the job. I'm creating cost of goods sold when I'm doing that, as long as it's an inventory part. I'm creating a cost of goods sold. I'm creating no revenue. There is no revenue, but I'm transferring ownership. It will relieve inventory from whatever warehouse I draw from, and it will transfer that to the job and create costs of goods sold. Now, obviously, when I do that, I'm updating all of my accounts, and I have reports that tell me what went to that job. I have all those things available to me. The mechanism is important, and this is the mechanism. This is how you would make that happen. So this is the important part. It isn't so much where do I go to see it, because there's a lot of answers, but this is the mechanism where the software understands, because it has no invoice to look at. That's the assumption. We have no invoice to look at because it's a 10-month job. While I've been doing this job, I've been using the inventory transfer. Now, really how it would normally work for most of you is you would go to the lookup. So picture me in your warehouse, and I go to lookup, and I put it in barcode scanning mode, like that. I filter it if I need to, but then I start scanning all of the items that I'm staging. I'm scanning all those things, I'm finding them, selecting them, whatever it takes, doesn't matter. But when you put these items on here, let me just do it, and hit OK, then you can imagine very quickly I've taken this entire pile of stuff that I'm about to deliver to the guys, or maybe they're coming to get it, putting it into this form. When I hit the save button, I have then transferred it to that job, and I have lots of reports that tell me about it. So I'm going to do that. I'm going to click Save and Close. All right, we just created that movement. Now they bring some back to me. All right, so I'm going to go back to that form, inventory transfer, and it's today's date. This time the type of action is return inventory. All right, well, from who? Not really from who, but from what job? All right, I picked that job. Now I go to my item list, and this is a common phone call to tech support or a question to me. Hey, something's wrong with the software. I went to the item list, and there's only like 8 things in there, 10 things in there, and I got thousands of things. Well, it's only showing you what you transferred. You can't bring back something that you didn't transfer. So this is where you're grabbing one or more items that came back to you. I know how many I gave. I know how many they brought back. I also know about all the POs that have been created. All of that stuff, I know about it. It's all flowing into the software. So the answer is use this form. Otherwise, you're creating an invoice, and you probably don't want to do that. Use this form, and then you've got lots of places that show you, including a job cost report with details, item details. You have all those mechanisms, or pardon me, you have all those reports if you use this mechanism. All right, so I'm going to return an item, hit Save and Close. Now I could go up to Reports, go to Jobs, Job Costing, go to my job estimate versus actual. I could do a summary or detailed. I'll do detailed. And then I'll pick that particular job right there. And I'll have a date range of all, just so I can pick things up. And that's good enough. Let's see what happens. What I should see is I should see everything that was on an estimate versus everything that actually happened, which would include invoices, but we may not have one, and inventory transfers going out, coming back in, etc. So that's where you would see all of those things. And there's other places, but that's just one of them. All right. Was there another question, Will, or a follow-up?
There is not, no.
Okay, I think that's it. Probably the couple things that people would tell me that they learned that were new is they'd say, I never understood the over-under. I didn't know about that tricky right-click, adjust my over-under thing. And then they'd say, inventory transfer, when did you add that? We added that in 2015, I think. So it's been there a long time. It's been there a long, long time. Maybe earlier than that, but it's been there a long time. Most of you don't need it. It was built for those 10-month jobs. The inventory transfer is not something that you would use for your everyday get in and get out installation, 2, 3, 4, or 5 days. Don't need it. What it's really good for is jobs that span multiple reporting periods, multiple months, if not quarters, maybe even a year, and you need to recognize costs. That's a costing method, by the way. And if that's a costing method that applies to your company, that you want to recognize costs as you go, not contract completion, but as you go, use that inventory transfer form, and that keeps track of everything going out for as long as you want it to. All right, well, that wraps it up. I appreciate the questions as always, and I appreciate you coming. Again, I'm James Leichter. I'm the founder of Aptora, and behalf of everyone here, especially Alicia and Will behind the camera, I want to say thank you for being our customers. We appreciate you, and you're the only reason why we exist. Until next month, thank you very much, and I'll see you again. Good night.